Hello and welcome to my latest property report. I was meant to be at Wimbledon today, home of the world famous Wimbledon Tennis Championships, but ended up going yesterday so I could see Andy Murray's last match at Wimbledon in the doubles with his brother, and it's such a shame that they lost. Sadly, it's a typical British summer cloudy day, but at least the economic outlook is upbeat. There's much more positive economic news. UK inflation fell to 2% in May, reaching the Bank of England's target for the first time in almost 3 years. And while the Bank of England voted to keep the interest rate at 5.25% in June, an interest rate cut does look likely soon, possibly in August. Of course, the UK now has a Labour government and our new Prime Minister, Sir Keir Starmer. Now we'll have to wait to see how quickly they'll implement their election pledges when it comes to the housing market, and I'll bring you news of that as soon as it's announced. But first, let's talk about how the sales market is performing. It's interesting to note that the general election didn't really impact the London property market at all, having very little effect on house prices or buyers' plans. In fact, historically, after a general election, we see an uptick in activity. We recently carried out research which showed that in all but one of the general elections over the last 40 years, which is 9 in total, house prices rose by 5% over the following 12 months. For most buyers, wider economic trends are more important than politics. So their priorities tend to be the economy, the jobs market, and overall affordability. A buyer's individual circumstances dominate purchasing decisions, with falling inflation and interest rate cuts the major influences at the moment. In fact, Rightmove data backs up this. They're revealing that over the last 4 weeks, the number of sales being agreed has remained steady at 6% higher than a year ago, and buyer demand is now 5% higher than last year. Here at Benham & Reeves, we're seeing increasing numbers of new instructions, inquiry levels rising, and transactions forging ahead as planned. In fact, I always say I follow my own advice, and in a personal capacity, I'm pushing ahead with buying a 2-bedroom apartment in Kensington, which will give me a 5% gross yield. I did get a good deal, and I truly believe that property is the best place for your money. There are good deals out there, if you look, with decent yields. We continue to see strong interest from overseas buyers, taking advantage of what is a key factor for many, the weakness of sterling. Our international offices are busy carrying out property events, introducing overseas clients to investment opportunities in London. Our Hong Kong team will be accompanying clients on escorted trips to London this coming summer, offering tours of new developments handpicked to suit the client's requirements and budgets, as well as offering an exclusive preview of the latest launch at White City Living next to Shepherd's Bush. Meanwhile, our Bangkok team is continuing one-to-one discussions with investors. That includes the preview of White City Living, as well as Wandsworth Mills SW18, which both really set the bar when it comes to their connectivity, amazing facilities, and reasonable price point. Our Malaysia team is also offering previews of White City Living, but also showcasing homes close to London's top universities, which is a real draw for investors looking for a strong rental income, as well as parents looking for a London home for their student children. And as Barratt's exclusive agent, our India office has just finished a successful showcase of Royal Gateway in West London with events in Delhi and Mumbai. This Barratt London development is part of a £26 billion regeneration scheme with excellent connectivity into central London on the Elizabeth line with low entry pricing. And now let's move on to the lettings market. Well, as ever, demand for rental homes in London remains super high. The landscape is a bit more balanced now as the frenetic post-COVID activity, those ease now. But London is still experiencing a chronic shortage of rental properties, and students are out in abundance snapping up homes for the next academic year. We have 14 applicants for every available property, and void periods at historic low levels, helping to boost the rental yields. And while over 30 phases in developments are completing across London, including the final completions at 250 City Road, housing stock is easing a little, but importantly is nowhere near enough to meet the demand. We've been carrying out rental and sales valuations for landlords and are keen to hear from anyone who owns a property near a London university, as students are literally lining up. But please do bear in mind that the London property market is complex and nuanced, so it's crucial to take advice from a local expert who can provide an up-to-date valuation and accurate of what's going on. So please do get in touch if you've got a property completing soon or about to become vacant, or for that matter if your tenant wants to renew. Rents are still increasing, and I think you'll be pleasantly surprised at how much we can achieve for you. And of course, if you do think you may want to sell, then again get in touch and let us tell you what your property's worth. Thanks very much for watching today, and I'll see you next month for another update.